my name is Mark Mayfield, and welcome to another PFA market and economic update. In this video, we're just going to explain the recent up and down movement in the stock market since the beginning of the year, take a look at technology, specifically the Magnificent Seven, and then take a look at stock valuations and where we're at today. The first slide here, we're going to take a look at the total returns and intra-year pullbacks for the S&P 500 index. Market volatility is just a normal part of investing. So 2024, if you look, started the year similar to where we're at now. We had an 8% pullback in the S&P 500 before finishing the year up 25%. Typically, after two strong years of the market, look at 23, 24, both years were big positive years. It's natural to see a little bit of volatility, a little bit of fluctuation in the market. This chart just reemphasized the fact that intra-year market pullbacks are common, even in years where we see a strong market rally. So again, for example, if we look at what the S&P did in 2023, we had a pullback of 10% intra-year, finished the year up 26. Last year, we had an intra-year pullback of 8%, finished the year up 25%. So investors just need to stay true to kind of your portfolio, your investment strategy, and not overreact to the market being down just after a few days of trading here in 2025. Here we'll take a look at the Magnificent Seven. So you see the stocks listed there. This is basically a group of high-performing tech stocks that in large part have driven a lot of the market growth we've seen here in the last couple of years. And that growth is largely due to artificial intelligence. So since 2023, this group of stocks is up 250%. Since 2020 COVID, this group of stocks is up 500%. So the technology stocks, in particular these seven, they face a lot of risk from changes in interest rates, since their overall valuations are heavily dependent on the future earnings expectations. So there are many reasons why tech stocks continue to be attractive. It's part of our everyday life. However, it's also important to continue to remain diversified and attempt to benefit from other parts of the market as well. Lastly, we're going to take a look at the price to earnings ratio for the S&P 500. Using the forward earnings estimates for the next 12 months. So valuations for the S&P 500 have increased substantially as of late, mostly in part to the strong market rally. At 21.5 times earnings, the S&P, the PE ratio is approaching what it was in the tech bubble of the early 2000s of 24.5. Despite the high valuation, I think today's environment is a little bit different. Economic fundamentals remain strong, steady growth, robust job market, healthy corporate earnings. And so I think at the end, we just need to, this highlights the importance of maintaining a portfolio of balance across different market sectors and different investment styles. I hope you found this video helpful. Stay tuned for the PFA market updates next month.